And if this repeats for this cycle, then that would mean that we still have to wait until Q4 for that bear market bottom.
Welcome to Real Vision Crypto. I'm Ash Bennington. Today, I speak with Rekt Capital for another deep dive on technical analysis. As always, views expressed by the guest about price do not represent Real Vision's views or the views of the host. Rekt, welcome back to Real Vision Crypto.
It's a pleasure to be back, Ash. Hello.
It's a pleasure to have you here. Let's jump right in.
So let's have a look at the first chart here. The three macro triangles for Bitcoin's price action. This is the monthly time frame. We have three distinct triangles forming over time every few years, and they have very many recurring tendencies, and specifically they are the macro lower highs, and that's denoted by these black diagonal downtrending resistances, which are a point of rejection for price action over these particular triangles. But also we have a base, a horizontal base that supports the price action before inevitably we see a breakdown from what is essentially a descending triangle. And when we see a descending triangle breakdown, you can see here in the yellow circle, that's where we see the beginning of the downtrend. And in 2015, when we saw that breakdown, it was quite a slow breakdown. It took 3 months to fully accelerate and gain that acceleratory sell side momentum before finally reaching that generational bottom. So at the moment, right over here, in this current period of price action, in this macro triangle, you're seeing that Bitcoin is entering that acceleration phase of the downtrend in an effort to find that generational bottom. And if we look across history, we see that final acceleration, long downside wicks in the candles, where we see a lot of volatility take place, lots of capitulation, particularly because extreme fear is the predominant sentiment in the market and maximum pessimism resides as well. And that's, of course, at the same time where we see that acceleration in the downtrend finally reach that generational bottom. And then we see a slowing down in the momentum of sellers, essentially, before the market goes sideways. So once we see that downtrend acceleration, loads of long monthly candles with long downside wicks oftentimes, or even shorter ones in the 2019 period. But once we finally get that generational bottom, we go sideways for a few months. And in 2015, Bitcoin went sideways for 5 months after that final bottoming candle, before finally breaking that macro diagonal black downtrending resistance to enter a new macro uptrend. So if we look at the macro triangle of today, so to speak, we still need to see that generational bottom form after downtrend acceleration. And we also need to see that sideways period of consolidation for multiple months. And just based on the positioning of the black diagonal downtrending resistance for this triangle, it could take a long time for not only both these phases to complete. Of course, the bottoming phase, the acceleration in the downtrend, takes not too much time at all, but it's the consolidation that lasts the longest. So after that bottoming out, we're going to see multiple months of sideways price action until we finally reach that diagonal resistance for a breakout into a new macro uptrend.
So, Rekt, as we look at this chart here, if you look at the y-axis, this is obviously semi-log y. The y-scale changes in distance represent equal changes in price. Interesting thing about this chart is going back to 2014 at the left side of the first triangle. Obviously, these are dramatically different price points, but the overall pattern in terms of percentage change is the same. Talk a little bit about that and what it is that we're seeing in those triangle patterns.
That's an interesting question, Ash, because we do see some recurring tendencies in terms of the retracement depth once those descending triangles are broken down. And we see somewhere between 50 to 60% downside once that breakdown occurs. And we've seen this time and time again. Of course, there are only 3 data points in terms of 3 macro triangles, but already some similarities happening here. That's 50 to 60%. And at the moment, right now, Bitcoin in its current price positioning is very close to that 50% mark. In fact, it's been minus 49%. But if history were to repeat, we could see an extra 10% take place. So minus 60% breakdown from the base of the ascending triangle, which could bring price into the lower 15,000s, maybe a little bit lower than that. So we are seeing those historical tendencies not only in the price structure, but also in the retracement depth. But at the same time, sample size does matter. But nonetheless, this is showing to us a very important fact, and that's that Bitcoin's price action, this downtrend as a whole, is getting oversold. There are too many sellers versus the amount of buyers, not much buy volume occurring at the moment, but the downtrend is slowly reaching its most pivotal point, that capitulation phase, and then we're going to see slowing in the downtrend, the consolidation phase. So we're very close to that period, and the extreme volume we've been seeing and the retracement depth is a testament to that.
Yeah. So let's zoom the chart into the next view.
So let's move on to chart number 2. And this is a good illustration of what I've mentioned just a moment ago, that Bitcoin is entering a period of being oversold. And this is a portion of the Bitcoin logarithmic growth curve channel. And the main takeaway here is that back in March 2020, Bitcoin actually broke down from its channel, from that Bitcoin logarithmic growth curve channel for the very first time ever. And when it broke down, it registered a retracement level of minus 49%. And what's interesting about this breakdown, so this is the second ever breakdown from the channel, we're seeing a minus 49% retracement once again. And the key takeaway about this chart is that this channel overall used to hold up price. In fact, the very bottom of this channel, this green growth curve, this green Fibonacci growth curve, that used to be the end of bear markets, or at least the end of downtrends. Bear market bottoms took place at this green trend line. And we can see a lot of that take place in the 2018 period, where that green trend line is holding as a support. And almost the case with March 2020, though we did see that very volatile deviation for the first time ever. So this is the second time ever that we're seeing a deviation from this channel. But the main takeaway here is that this channel is illustrating to us overselling, and that the point of maximum financial opportunity is slowly being approached by Bitcoin's price action.
So Rekt, looking at this chart, obviously multicolored band lines, what do those lines represent in terms of percentage change?
So these trend lines, these lines are essentially growth curve Fibonacci levels, and each line represents a Fibonacci number. And of course, the top channel is the 100% Fibonacci growth curve. This green bottom channel is going to be the 0% one, but for instance, the yellow one is the 0.382% Fibonacci retracement level. And this is essentially a way of just denoting, in my view, through the lens of this growth curve channel, denoting when bull markets end, when do new macro uptrends begin, when do bear market bottoms enter overselling. And this is how I utilize this growth curve channel. So moving on to chart number 3, this is the relative strength index, the RSI. And it's also a testament to the overselling that we're seeing, because if we just look at this RSI, it's on a scale of 0 to 100, theoretically speaking. But we never actually see Bitcoin's RSI values reach 0 or 20 or 10 or 30 even. By the same token, we don't really see it reach 100 either. But the whole idea here is that when the RSI level reaches the 80 plus region, this is where we see overbuying in the market. This is where too many buyers are interested in getting Bitcoin. The market is getting crowded. There aren't many sellers. So this is where we tend to see too much buying take place and essentially buy exhaustion. We tend to see FOMO wicks take place, FOMO buyers, the fear of missing out, guiding buyers to buy at the very peak before we see that trend reversal and bearish price action take place. So we can see here that in the 80 plus region on the RSI, we can, with good accuracy, denote where bull market peaks take place, because that's where the overbuying occurs in terms of the RSI. On the flip side of that, we can denote bear market bottoms using the RSI when we see values of below 50. And you can see here that we've seen the green region reach the lower 40 values. In other words, oversold territory where too much selling is taking place. And this is where sell-side exhaustion and capitulation finally through panic selling takes place as well. And this is where we see market sentiment be at its worst point, where maximum pessimism and extreme fear prevail in the market. And we can see that in the past, we've seen only 2 data points. We've only seen the RSI reach this green box, the low 40s, in the 2015 bear market bottom and the 2018 December bear market bottom as well, before we finally reverse into a new macro uptrend. And right now, the Bitcoin RSI is reaching the lowest level ever. And that's what's showing the magnitude of this overselling, that we are now in a historic value for monthly RSI on Bitcoin's price action, that we're at the lowest value ever, prevailing and eclipsing the previous bear market bottom RSI values. So this is something that's never happened before, but it does offer us insight that Bitcoin is tremendously oversold.
So RSI, relative strength index, is a momentum oscillator. This basically shows us the magnitude of prior price changes. Obviously doesn't incorporate data that isn't in price, but nonetheless, when you look at this chart, a pretty striking chart based on how far back that x-axis goes.
And in fact, it's quite an interesting technique to just look at the RSI rather than the price action, because by looking at the price action, we might get caught up in the price acceleration towards the upside and want to FOMO or feel a bit of greed and euphoria. And vice versa, when we see strong capitulation in the price action, we might get a bit scared and fearful and panicky. But if we get rid of the price action and just focus on the RSI really does remove that emotionality from the price action and the emotionality from our trading or investing. And if we move on to chart number 4, we can see a lot of historical tendencies in the RSI movements as well, which can help us identify periods of outsized opportunity for long-term investors. Because just by looking at the RSI, we can find out where Bitcoin is reaching that oversold period, and where that period of selling is going to be slowly slowing down. Now, in this chart number 4, we see blue vertical lines, and these represent the Bitcoin halving events. And these Bitcoin halving events tend to be very strong catalysts for new macro uptrends. But of course, the greatest acceleration in price action towards the upside occurs after the halving. But of course, the next halving is going to take place in April 2024. So that's still a way away. But we need to watch out for the trends that happen prior to the halving, this April 2024 halving. And just looking back, historically, bear market bottoms in Bitcoin's price action and the RSI, they tend to take place 486 days to 547 days before the halving. And that's quite interesting, because there is a mirroring quality in some way that at least 500 days or so need to take place for that bottom prior to the halving to occur. And if this repeats for this cycle, then that would mean that we still have to wait until Q4 for that bear market bottom to fully form and just give us an indication that that generational bottom is indeed there. It's been printed and we're going to be consolidating for a while. So if history repeats and Bitcoin forms a bear market bottom on the RSI some 486 days to 550 days, then that bear market bottom is going to take place in about August, September to November, Q4, roughly speaking, just looking here on average. So let's dive into chart number 5. And this is the 200-week moving average, and many investors are watching this moving average. It has historically preceded bear market bottoms. Just looking back to 2015, for example, you can see that some downside wicking in the price action occurs below the 200-week moving average, which is this yellow line. But weekly candle closes actually happen at or just above this line. So the weekly candle closes show some sustainability in the price action. The wicks show volatility and more extreme emotions in the market. But if we see candle closes above the moving average, that means that it hasn't been lost as a supporting force in the market, that buyers are really dedicated towards buying at that moving average, and this is what props up price. And we tend to see some downside wicking, and that's the interesting thing about this moving average. Downside wicking, so capitulation, panic selling behavior, tends to occur in the form, and this graphical representation in the form of these downside wicks. Lots of fervent emotional buy side and sell side behavior occurring in the red downside wicking candle. For instance, in March 2020, we saw lots of fervent emotions during that period where we saw capitulation and long downside wicking below the 200-week moving average, and the same in the follow through, in the buy side follow through, where we saw wicks towards the upside and the downside. There was tremendous volatility and emotionality in that period. And of course, looking back now, a few years back, it's been a few years since March 2020. We forget about those emotions. But of course, those who lived it and were watching the charts at that time remember that volatility in the emotions. And a few years from now, we're also not going to be remembering the emotions that we're feeling at this point in time, where Bitcoin has actually also weekly candle closed below the 200-week moving average. We're seeing price action below here. But just historically speaking, bear market bottoms tend to form in and around this 200-week moving average.
So that orange line, obviously, the 200-week moving average, a very long duration moving average, that's about 3.8 years. In doing so, it smooths out a lot of the volatility that we see. Is there a danger when we look at a 200-week moving average that we may be overfitting the data and drawing conclusions from it that may be a little bit too powerful than what the price action would suggest?
Well, it's a really good observation, Ash, that you mentioned the fact that it's a long-standing moving average. So the moving average doesn't really move much as time goes on, unless price action really deviates from that moving average. And historically, we haven't seen much deviation towards the downside below that moving average. So it has always been a point of reference for where the sell side momentum in bear markets is slowing down and where bear market bottoms do tend to form. And in terms of these downside wicks, chart number 6 is a good visual representation of how much retracement we see below these 200, this particular moving average. So in 2015, we saw a minus 22% wick below the moving average. And later that year, we saw a 13% deviation. In the 2018 bear market, we didn't see any deviation in the form of wicks below the moving average. In fact, we formed a stable bottom at the 200-week moving average, but we saw the greatest ever downside wicking in price action in March 2020, where we saw minus 28% in downside wicking. And my point here in just showcasing these downside wicking behaviors below this 200-week moving average is that right now Bitcoin is deviating minus 21%, and within the historical range of minus 13 to minus 28% below the 200-week moving average, minus 21% still fits that historical range. So just getting rid of all those emotions and the fact that price has retraced a lot in the past few weeks, and that we've only seen one green candle in the past 12 weeks or so, just going against all these sort of facts and emotions, if we just look at this chart, we know that minus 21% is something that's happened in the past in the context of the 200-week moving average, and that slowly but surely a bear market bottom will soon form, but probably, most likely, for the first time ever, just below the 200-week moving average, and a consolidation period below this 200-week moving average will likely be that generational bottom showing its signs of forming.
Rekt, let's take a look at the next chart.
Sure. What's interesting about this chart is still the 200-week moving average, a historical reference point for bear market bottoms, but are we seeing double bottom formations develop at the 200-week moving average? And these green circles just denote these double bottoms. So we hit the 200-week moving average once, and then we see another rebound from that 200-week moving average. But we're seeing that in the 2019-2020 phase, this macro double bottom is widening. It's spacing out, so it takes a longer time for that second double bottom to form, actually. So my idea here is that, and of course this was a chart from a few weeks back before we even reached the 200-week moving average for the first time. Right now we are currently in the process of forming the very first bottom of the macro double bottom for this market cycle. So in keeping with the fact that these macro double bottoms form at the 200-week moving average, and that these bottoms are spacing apart, there is some lengthening taking place. I think that as time goes on, at around the 22,000 region is where the 200-week moving average resides. So of course this green circle shows that downside wicking is permitted, it is normal, but around the 22,000 region is where price should be able to stabilize, as it has in the past, of course with some scope for downside wicking. But in the future, that second bottom, in the far future, in fact, many years away still, we're going to see a second bottom form. And this is, of course, when the 200-week moving average is going to represent a different price. And that price is probably going to be something in the 40s, the low 40,000s.
Rekt, you mentioned this idea of this double bottom not taking place perhaps for more than a year now. Obviously, as you represented on this chart, you can see the spread between those double bottoms becoming greater in terms of the amount of time that passes between them. Any sense, any indication on how far those two double bottoms may be apart on this particular cycle?
That's a great question, and I'm going to aid the answer to this question with chart number 8. Let's dive into the next chart and analyze how these double bottoms have occurred over time. So in 2015, it took for that first macro double bottom 224 days to form. And in the 2019-2020 period, or rather 2018-2020 period, it took 455 days. And if we see this lengthening take place by the same amount of time, so essentially we're seeing a increase in about 225 days in the formation of this macro double bottom, then it could take 650 days, roughly speaking, to see that second bottom of the macro double bottom form at a price point of around 41,000 if the incline of this 200-week moving average remains roughly the same.
That's about 1 year and 9 months if my back of the envelope math is right.
That's right. That's right. And what's interesting about that period is not only is it showing the lengthening, but it's interesting how this second double bottom takes place before the halving event. And these halving events, once again, are noted in blue vertical lines. And these second double bottoms take place before the halving event. But what's interesting about the March 2020 capitulation just before May 2020 halving is that indeed it occurred just before, like a few weeks before the halving event. So there is a possibility that in this cycle, we'll see that second double bottom form maybe after the halving, or maybe just before the halving, maybe with the halving, who knows? But the halving is going to be a very important indicator to just give us insight in terms of, are we going to slowly get that second double bottom? Are we going to get that final bottom to finally end that double bottom formation and then continue into that exponential post-halving new macro uptrend?
Talking of finality, Rekt, I understand we have one more chart.
That's right. This is a chart that's a little bit different from the others. This is going to be the monthly time frame, and this is the 20-month moving average. And I like to use this moving average as a reference point for bull markets beginning or ending, and bear markets capitulating and finally ending. So if we just look at this moving average, whenever Bitcoin breaks above it, like it did in 2016, we saw tremendous price action, price acceleration towards the upside into a new macro uptrend. But when we lost that moving average in 2018, then we see strong capitulation, acceleration in the downtrend, and a bear market bottom form. And in March 2020, we saw the same thing take place. So right now, we're once again below the 20-month moving average. We've been below this moving average for 2 solid months by this point. And just looking across history, we tend to see price retracement depth below the 20-month moving average range between -46% to -63%, like we saw in 2014. So right now, Bitcoin has retraced -57% since losing the 20-month moving average. So we're already on the higher end of average when it comes to historical retracement depth below the 20-month moving average. And it's really interesting to see that once again we're seeing a bit of overselling. There is less and less momentum towards the downside, and we're slowly going to be forming some sort of generational bottom before consolidating for a certain period of time, for multiple months in fact, before finally beginning that new bull market uptrend sometime next year.
Rekt, lots of charts, lots of information. Final thoughts, key takeaways that you'd like to leave our viewers and listeners with?
Well, the main takeaway from today's conversation, Ash, I believe, is that Bitcoin is entering a period of outsized ROI for long-term investors based on what we've seen in the past. Deviations in the form of downside wicking below the 200-week moving average, which has been a very good indicator for bear market bottoms forming closely around it. The 20-month moving average, deviations below that, we're seeing retracement depth very similar amounts to what we've seen in the past, indicating further evidence that there is overselling that is slowly going to be reaching its culmination point. And RSI being the historic lowest ever value, that's also showcasing some overselling there. And of course, a very first time in terms of the 40 level being revisited on the RSI. And lastly, the logarithmic growth curve channel has been broken down once again, but once again showcasing that overselling, that price is indeed reaching that point of maximum financial opportunity through the lens of bargain buyers. But of course, panic sellers are going to be looking at it as a period where loss aversion starts to really dominate the mind, where we start to cut our losses, we panic sell and capitulate essentially most likely at the bear market bottom. So a generational support area is going to start forming in the coming months. We're still in downtrend acceleration, but once that downtrend acceleration reaches its fever pitch moment, we'll enter a period of consolidation to enjoy an extended range of sideways movement before and in preparation for the next macro uptrend.
Rekt Capital, always a pleasure to have you on the show. Thank you for sharing your perspective.
Thank you so much for having me back here in Real Vision, Ash. It was great speaking to you today.
Thanks for watching, everyone.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.